Hey everybody, and welcome to another episode of Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel this morning, wherever you are tuning in from around the world. Thanks for watching. Unfortunately, we don't have a video today, but the show must go on. And we're going to be talking about the very important topic that everybody seems to be asking me at the moment. At what point would the bull market be over? And I did a video just a few days ago, 5 days ago, and we'll look at that at the moment, the level that must hold. And now we're going to talk about at what point would the bull market be over. And so this is important information that you do not want to miss, so buckle up. We're going to jump into it, but before we start that, smash the like button. This will help get the channel out to more people and does help support the channel, as does your wonderful comments that you leave below. And those of you who ask questions in the comment section, I do get back to those as soon as I'm able to. However, if you'd like more immediate engagement, interaction, you can find me in the Discord, the Stock with Josh Discord. You can find the details for that in the description of this video. Just click on the more button below this video. The description will pop out if it's not already showing for you there. And I share, education, insights, reasons, some of my trade setups, and of course, entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? All right, so let's look at some of the news here before we jump into the charts. And there's been a fair bit of news. And first of all, the worst February in history. My word, there has been some red Februaries, and this red February here in 2025 has been very severe on the Bitcoin price there. But wait, there's some good news. March historically been an up month for Bitcoin. The bad news, February was also supposed to be. So I don't know if anybody is going to trust this metric now, because generally when we've seen a red February, we've always had a red March afterwards. However, it has been a very good month for Bitcoin, averaging a 13.12% return. So let's see if that is going to shake out. And so let's look at the charts, and the charts, the line in the sand. Now look, I did share a video 5 days ago. Some people said, oh, why didn't you tell us? I did. Here is it. The level that must hold. And I gave those levels in that video. And I said, this is the level that must hold. A level that had to have held was the 90,000. I'd only been talking about the 90,000 level since November, since we broke out of it. And every day had been talking about that $90,000 level and how it was critical to hold that level, and how we were ranging in that 90 to 100,000. Now I said once we lost that, there was fresh air in between that 88 to 90,000 level all the way down to 73, and that's where we could be possibly going. Okay, I know that's going to freak some people out, but unless you have been shorting the market and making money on the way down, as many people in the Discord have been doing, and I've been teaching people how to do that, and the wins are starting to stack up. So if you want to learn more about that, or learn how to do that, how you can make money on the way down, you can join me in the Discord. And I will add to that as well that I know some people that in the last cycle made more money shorting from the top of the bull market all the way down to the bottom of the bear market than they did in the bull market. You can make money on the way down as well as the way up, okay? So if your portfolio is looking a little bit lean and down, this can help bolster it. If you traded this big candle on the way down, you could have made a significant amount of money. Everybody was euphoric here. Why are people not euphoric here? Is because this is a trader's market, and you have to learn how to make money on the way up and on the way down and when it's ranging. And I teach how to do all of that in the Discords, and there is a link below in the description. You can get on the wait list for the Tribal Trades Discord as well by emailing me in the description below. Okay, so let's see. So I gave you the line that must hold. Now where are we at? Well, we're under the 200 EMA on the daily, which isn't great. We just rejected there today, actually, or last night. So we rejected there. And I did say to you when we lost this level, we were coming down to the 200 EMA on the daily. That happened. Then I said when we lost the 200 EMA in the daily, we were going to come down to the 200-day moving average. That happened as well. Now I've said that I'm going to be very surprised if we don't come down to the 50 EMA on the weekly, okay? And this other, I'm going to put this other one in here. This is the 50-week moving average, not to be confused with the EMA. So the 50, I'm going to put that in here, 50-week moving average, okay? Okay, so that's similar to the 50-day moving average, and please watch my educational videos for the difference between those, and for the sake of time, I'm not going to go through the difference there. Okay, so those are the levels that we must hold. That's really these are the bull market support levels that we have to hold. And, you know, we are, you know, we're above those at the moment. This one's sitting at about 74, and this one's at about 76 at the moment. And so it's not unusual for Bitcoin to retest this during a bull market. In fact, we're going to go back to April here and look at how that retested and what happened in the last bull cycle when we had the correction in April, May. And I said this feels very much like the April and May correction time. And what you can see happen here is when we came down to, where are we there? There's March. And let's go back to, there we go. So what we saw is in the April drop, which was quite a severe drop. And so people are going, oh, it's over. You know, Bitcoin's going to zero. I'm selling. I'm going away. But you haven't properly studied where the movements of the markets and how important this is here. And so what you can see is, number one, the 50 EMA on the weekly held support. It broke a little bit below it. You can see there we had a couple of candles there, 1, 2 weekly candles where it got a little bit scary, and we tested that 50-week moving average and held. And we even technically, did we see a close below that? I think we might have there. What was the close there? That was that might have been there, 35,381, and no, we didn't see a close below it. So we came down into it and held the line. So that is the line that, in my opinion, we must hold. Now, if we were to lose this level and were to come down, then yes, you could say technically that the bull market is over from a historical point of view. And you can see what happened here when we then went up on another parabolic move. This became an amazing buy in the dip opportunity, the 50 EMA on the weekly and the 50 weekly moving average, and it skyrocketed all the way up to a new all-time high of 69. And all the people that sold down here had to FOMO back in or were left crying that they didn't make this. I bought this dip here. It was one of the hardest dips that I've ever had to buy, but I bought that dip and it paid great dividends through the end of November. Now, of course, what happened was when we came down here, and in December, this would have been the place to exit. So a lot of people are, oh, I sold the top. And it's like, it was pure luck. Because at the end of the day, the bull market is not confirmed being over until this red candle here in early January. Technically, maybe starting to there might have been some people buying the dip there, but it would have been pretty scary that we'd come and revisit it again over here, and that we were, but again, we had a close under there, and then it just came back and retest it. That would have been the final place to get out on a rejection. So you still could have got out in April and then to the downside. And now, look, I know people saying, oh, yeah, but it was 69. And by the time we got that confirmation, it was 46. Yeah, but you should have taken profits up here. You should have been taking profits up here. The RSIs were overcooked. These were big green candles to the upside. So let's move back to where we are on the current day time frame and see what that's going to look like here. And so it's quite possible, I would say it's actually more likely right now that we do actually come down and retest these levels, whether it be in March or whether we see it in May. We might, from here, we could go up. Look, if we can hold this 200-day moving average. So first of all, if we can hold this 200-day moving average we have so far, then this dip might be over. And then we might move up out of here, have a very bullish March and April, and then sometime April, May, we see this come down. June, maybe we come down and test this 50 EMA or in the 50-week moving average, which would be a little bit higher, okay? So that's the other thing that could possibly happen. So that's option number 2. And then option number 3 is that we just completely capitulate down. We come down, retest these, break below, and that will be a place to, historically would have been the place to exit the market. Now, of course, we could have a big wick below there. I don't see there's an issue with having a big wick down and just scare the pants out of the people, but it's closing below that. And you might have to wait a whole week until there's a weekly close, but you don't want to see a weekly close below, especially multiple weekly closes, and especially if we lose the tribal trades trend line here and the Fibonacci at 73 there, that would be a little bit tough. So that's what I'm looking for the many people that have asked me, when would I consider that the bull market is likely over if we were to lose the 50-week moving average. And of course, the 50 EMA on the weekly is just above that, and we might not even come down to that. That's why this could be that's why I share this, because this could be a little buy the dip opportunity. This could be a buy the dip opportunity, and if we lose that, obviously, then that's the line in the sand that we have right now. But before we even get there, we have the 200-day MA currently sitting up there at around $81,000. And so that one, that has held. But you can see how that big wick came down, and it came down pretty like $4,000 below it. So we could see a situation here where we drop heavily below it and even come back and test 69, and it could be down there for a couple of days, and people go, oh, it's over, and it may not be over, okay? What we're looking for is a close below. So mark that on your charts, make a note of that. These are the two levels here. This is our bull market support, and if we lose those, then the bull market is likely going to be at an end based on the historical data anyway. So the 200-day moving average, we're holding that for the moment. And so those are the three scenarios. Let me know which ones you think. Option A, that we're going to hold this 200-day moving average and then continue on up and have a bullish March, April kind of time, have some bullish to the upside. Maybe we come all the way back to this 90, 92 and then capitulate down from there. But option A, option one is we push up and we have found our bottom for now, and we're going to have some bullish moves to the upside. Of course, we've got the White House doing the strategic crypto meeting on March the 7th, but I'm not really sure what the purpose of that or what's going to come out of that, okay? It's all very good to sit around a table and talk, but what is some action that's going to happen? I want to see some takeaway. I just don't want to see talk. I want to see the walk. Okay. And then, of course, option two is that we come down and test this EMA on the weekly, or even maybe here, and just like we did in April, May, and then we shoot back to the upside like we saw and make a new all-time high. Or the third option, option three, is that we've dropped, we're just going to completely lose these and capitulate, and they're going to go into a bear market early. I'd like to hear some thoughts on that. Obviously, with the yellow brick road, the 6-month chart is the one that is really need to keep an eye on, because there are billions and billions and billions of dollars to the downside there, as you can see as I move my cursor all the way down there. You just keep going down, but most of it is kind of around that 73, 74 level, 72, 71 level. Most of it is around that area. There's a big band and block there that is in danger, and I would not be surprised if the market makers come and get that. So I'm going to go with option two. That's what my most likely scenario is there. If I had to pick a side, it's going to be option two, that we come down and we test that 50-week moving average, and on the 50-week moving average and the 50 EMA on the weekly down there at around 76 and 74. Of course, those prices may be different by the time they come and get it. You do see there's plenty of liquidity both to the upside and to the downside on multiple charts here. You can see, and even as you zoom out, there is a lot of liquidity to the upside here. Especially if you go to the 1-month chart, man, there is some up there at $100,000. That would be nice to get back to that level, of course, there. And even if you go on the weekly time frame, there is more liquidity to the upside. Man, look at the weekly from 86 all the way up to 97. There is a ton of liquidity there, but it's in the millions. 48 million and 86 million and 44 million and 36 million. When you look on the 6-month chart, it's all in the billions. 1 billion, 3 billion, 2 billion, 3 billion, 1 billion. And so 2 billion. And so you just see all of that to the downside. If I'm the market maker, I'm going to come down and get that. Of course, they can come down and get it later in the bear market which they might well do as well. And that's also the option. But let me know your thoughts down below. What do you think? Option A is the bottom is in and we see some upside from now, March, April. Option B, the bottom's almost in. We're going to tag the 50 EMA and the 50-week moving average, and then we're going to see some upside into a new all-time high. Or option 3, we're just going to go straight through those into a bear market. I'd like to hear your thoughts. And until the next episode, or until I see you in the Discord, happy trading.